Welcome to the Anvil and Iron podcast, where we're on a mission to talk to the most innovative minds shaping the future of business. Each episode, we sit down with leaders who are forging new paths in business and beyond. All right, the kind of people that you definitely want to know and the people that you want inside your network. So expect genuine conversations, real insights, and no stinking corporate fluff. All right, because the best ideas are really forged through authentic connection. And the most successful leaders are often the most down-to-earth folks that you'll ever meet. So today I'm really excited to bring you John Stafford from Zeti. John is the SVP of North American Sales for Zeti, and he's one of those people. So John, thanks so much for joining us on the Anvil and Iron show.
Yeah, my pleasure. Very, very humbling hearing some of those things, and I'd love to think I'm one of those people. I think a lot of the secret to success is just surround yourself with good people, right?
That absolutely is, and that's the secret of a good leader, to give your people the credit. So, hey, most people like to jump in straight on the business stuff. Tell me something about your personal life. Tell me about John Stafford.
Yeah, personal life. Super active guy. Live in Baltimore. Been all over up and down the East Coast. Take physical activity serious. I've boxed for about a decade. I'm now a cross lifter, as I realized as you approach 50, shots to the head have a diminishing return. But I think it's important to stay active. Huge reader. I've always got a half a dozen books sitting on the shelf. Fun fact, I closed on a new property on Monday and moving out of this property in a couple days. So to be the last vision of some of this background.
Congratulations.
Thanks.
So, hey, so tell me about your role and maybe share something that people just wouldn't know about Zeti, whether it's a lesser known part of what you do or, a story that shapes how you approach business.
Yeah, happy to. And maybe if I can, just by way of quick background, I've spent about 20 years in the fleet management space. So out of college, I was a founding member of the Mid-Atlantic market here in Baltimore for Enterprise Fleet Management. Was with Enterprise for about 13 years, surrounded by a great team, and was really in a regional CFO type position. Moved up to New England, managed that market for a number of years. Enterprise was really focused on those small, medium enterprise companies before transitioning over to LeasePlan. LeasePlan at the time was the only global fleet management company in the world, the largest in the space, managed about 1.5 million vehicles in 34 countries. But we're really focused on the largest global companies in the world. So I had a chance to really work with small companies and large companies, and then transitioned over here to Zeti about 2.5 years ago. But I think one of the things that's been really consistent is just the impact of working with people to really translate operational impact into financial data. And I think that's really something that, maybe people miss with Zeti. We were founded by somebody with a finance background and someone with a tech background, but it was really always about integrating, asset data directly into financial processes. I think that's really one of those pain points from operators, and something I think in fleet management that we really started rolling out, maybe 15 years ago, was the concept of total cost of ownership, and really taking a hard look at all those core pieces of data that comes out of that asset being a vehicle to really make good financial decisions. But yeah, it's something that's really in our DNA. And I think today it's really all about creating that shared language between an operator and those capital or financial partners.
Excellent. Thanks so much for sharing that. Hey, so I know that you, as far as North America is concerned, you're in a hyper growth kind of mode. So scaling is always tough. What kind of bottlenecks have you found are the most stubborn? Is it technical? Is it market adoption? Is it sales, customer acquisition, or anything else?
Yeah. I think change is always the most stubborn thing, regardless what it is. I mean, we're humans and we don't want to change the way we do things. I think we're really different than a lot of companies is we really cross all the way from the operator into the lender. So, there's a lot of companies out there that work with other companies that are looking for capital to help, really with brokering or deal flow and origination. Well, we do that. We meet with companies every day, whether they be somebody looking for a fleet of used Tesla Model 3s, or whether they be, Class 8 electric trucks or hydrogen trucks, all the way through equipment or energy infrastructure projects, so really any hard assets. So we work with those people. It's been a tough market to get money for any of those newer companies out there. It's been a unique market, but where we don't just step in and help get a deal closed is we work directly with the lenders who are also our customers on the closing, the capital deployment, the servicing and portfolio management, but really the differentiator for us is also the asset intelligence. So I think it's really kind of that aggregation of the full value stream of helping get deals closed and then helping to manage them. Where I think that's where a lot of the intelligence gets missed is just having operators speaking in one language, having finance houses speak in one language, and really trying to get them to have this same data, the same language available to really help make long-term partnerships and really help scale and move. But financial institutions don't want to change. Anyone here who's ever got a loan for their company or a loan for their house, again, I just finished all that. It is
I'm
a very
sorry.
manual process. It is a lot of back and forth. It is 15 emails from some analyst asking you random off the wall questions. So I think that's really the biggest pain point when you're doing something new is getting, your legacy companies, being in this situation, financial institutions, really change the way they're doing it. Because they've been pretty successful and they've been doing it for a long time. So, I think it's that human change factor.
Interesting. So speaking of change, how's your team dealt with resistance to adopting new technologies in fleets?
Yeah, great question. I think, going all the way back to when I started my career, believe it or not, we used to collect data on vehicles from fuel cards. So we worked with a lot of companies and really what you do when let's say you're in HVAC or in plumbing, you have hundreds of trucks that are driving all over the place. You gave them a little fuel card, and when they would go to the fuel pump, they'd have a pin, and then they'd put in the miles. So needless to say, that was fraught with human error. You had a lot of guys putting their pins in that were actually their password instead of miles. But that's really where we started by trying to gather data. And when you had data on mileage, then you could tell what a vehicle was worth. You could compare it to the market versus the loan value. So I think it probably sounds crazy now to say telematics data is old, but I can remember first selling telematics data into fleets. I think a lot of the concern was like, why would I want to pay for this data? What am I going to do with this data? But I think there's so many things that data has transformed over the last 20 years. And, I can't even imagine what the S curve looks like for the next 20 years. But in order to really make intelligent decisions, I've always tried to be a data-driven person. So I think, you always get an ROI from it. I think you need to really be able to pencil something out when you're talking about new tech and data. Soft costs never land well when you're working with the CFO trying to get something across the line. I think you got to really hit on what some of the hard costs are. But what I find when you start having those conversations, if you don't have data, is you truly just don't understand your costs. You don't understand your risks. So I think we've really focused on transparency through data. I think lenders have understood the risk reduction by better portfolio visibility. Typically, if you're going out and you're working with a lender to get, 100 vehicles or 5,000 vehicles, it's a lot of due diligence that's done on your business, a lot of due diligence done up front. And then, once you get past that due diligence, it's just, we hope you pay on the first of the month every month. Where I've always challenged, and have had a lot of success with lenders, here in the US, is if you're managing the data and you're looking at utilization, you should know well in advance if someone's in a position where they're going to miss a payment. In my experience, if you see a big drop in utilization, it's because somebody lost a big customer or they closed down a regional office. And if you do that, you probably don't need the assets. So this gives you plenty of time to go out there, grab those assets, sell them in the market, and really help the operator get into a place where they're going to stay liquid and lower their costs, where they don't want to be paying for vehicles they're not using, and then help the financial institution also make sure that they don't have that situation where they're trying to go out there and repossess assets or have bad debt in their balance sheet. So I think that's really where we're at a turning point. And you can talk about things like predictive maintenance and all the cool stuff that you can do with data today, faults on vehicles, just really pulling in a bunch of data to share with a lender, I think really helps them get more comfortable. And what we've seen with lenders who have worked with us is once they're starting to aggregate this data, the second deal or the third tranche of money tends to be cheaper because they realize like, wow, like this actually makes a big difference being able to see this visibility.
Wow. Okay, cool. So, hey, just out of curiosity, because I have a lending background, what is the transaction size with the operators that you work on from low to high? I mean, and then what would you say is in the middle?
Yeah, man, it's all over the board.
Cool.
We have a lot of people that come in and, we're a great referral partner for a lot of the OEMs out there. So Tesla as an example of someone who's really pushed electric vehicles. And we'll get requests for one or two vehicles. That can be a little bit harder to place. Typically we probably start in the low end, closer more to that $1 million ballpark, just for lenders to want to get engaged, to do the due diligence, to get legal documents done. But we've seen stuff, especially when you're talking energy infrastructure projects, all the way up into the $500,000 to $1 billion place. So, we're really all across the board when it comes to different type of assets we're supporting, as well as deal size.
So $1 million to $1 billion. Where would you say your sweet spot is then?
Yeah, I think the sweet spot in the market right now for
Yeah.
demand is really in that 1 to 10 million bucket, where it's really newer companies, scaling companies. It gets a lot easier to get money when you get into that $25 to $50 million ballpark. But again, when you're talking about some of these larger infrastructure projects, they get real big, real fast. Again, our big part of what Zeddy does is, we have a network of about 50 lenders. So we get real specific with our lenders. I've always kind of joked we're the Match.com of the space. Is we understand who the operator is, what the assets they're looking for, the size of their business, their financial position, their balance sheet, and park them with lenders who already have expressed to us that they have that appetite. So I think that saves a lot of time. If you're an operator and you're going to try to find money, you can be meeting with 10, 20, 30 different banks, private capital, debt, and just waste a lot of time. And anyone who's gone out there and done an equity raise, I was part of our Series A raise. I think we did 46 meetings. It can be really time consuming. So I think if you have someone that can really connect you with somebody that you can say, hey, I have a lender that wants this asset in your industry, in this space, at this size, can really save you a lot of time and energy. And that's really what it's all about for us, for the operators, is saving them time and saving them energy, ultimately saving them money.
Cool. So you're the chief revenue guy in North America. If you had to pick one area in your revenue growth machine to optimize over the next 6 months, what would that be?
Yeah, great question. It hasn't been demand in the United States. I think it's really going to come down to lenders starting to deploy more capital. I think interest rates have been high enough for long enough that we've seen a lot of money sit on the sidelines and be able to collect great rates risk-free. So I think now we've seen the Fed move back to, hey, we're lowering rates, and I think we're going to continue to see rates lowered. So I think that's going to really be good for the economy. There's so much, I think, pent-up demand out there. But I think that the biggest bottleneck is really lenders to start deploying capital. I've seen rates, for smaller fleets or for smaller businesses, anywhere from, 15 to 20% on the high side. Really hard to pencil out a successful business when your interest rates are that, I'd go as far as to say, oppressive. So I think as we see interest rates step down, I think we're going to see a really great injection of capital back into the markets. And I think we're going to see a ton of growth in the U.S. over the next couple of years. So
no lack, you don't feel like there's any lack of, is it hard to find operators that want to turn their fleet over? Is that a heavy, is that a tough road to hoe?
I thought it was going to be tougher. The demand has not been our challenge. We've not done a ton of outward marketing. We've done a lot of referral, a lot of word of mouth, a lot of our network. Again, myself, I've spent 20 years in the space. My vice president of operations is 20 years in the space. There's always people out there that are looking for money, and I think our value add for people that are already working with someone is there's no cost to working with us for operators. We're paid by lenders. So, worst case scenario, you find out you're getting a great deal from your lender today, and hey, pat on your back, great job. You can feel good about where you're at. Worst case scenario, you have bad financial terms or you're getting bad rates. Like, let us validate what you're doing in the market. So I've not met many companies that don't see the value in at least taking a look to see what else is out there. Where a lot of the demand I thought was going to come from your traditional fleets, that was my background in my space. There's been a lot of movement in medium duty vehicles, heavy duty vehicles, and the energy infrastructure has just really blown up. When you're talking about a mix of charging assets across the United States has grown dramatically in the last couple of years. You're seeing energy demands on our grid get really pushed from a combination of just us using more and more electronics, as well as the data centers that are really going to be the future push and all the AI that's pulling that power. So we're seeing lots of demand for battery energy storage and microgrids, as well as hydrogen, which is a lot bigger in Europe, but we're starting to see some of that develop here in the US.
All right, so here's one. If you could hire a room full of recent college grads, like and MBAs, a combination, good combination. I mean, like payroll, no object. All you got to do is throw them, raw steak every day, and they're just going to pound away in that room. They can't leave the room. They can't go see customers. Um, but they could do anything from a computer. What would you have them working on to move the needle for your company?
Yeah, that's a great question. I'd love to meet some of those people who can feed them with steak. I think the newer generations are just so much more ingrained with technology from birth. I mean, how many times are you out at dinner now where you see 3-year-olds sitting on iPhones? I mean, I don't need to ask you, Joe, what your first phone looked like or when you got it, but judging by our views, we were a lot older. We were a lot
Yeah.
older.
Oh, for sure. And I mean, it looked a lot like a brick, if that tells you. And it had a chirp chirp thing on the side of it. But
Yeah,
and
yeah,
frankly, that part actually breaks my heart about the kids on 3-year-olds on stuff. But and back to the room full of look,
yeah.
we can feed them Brussels sprouts if they're vegan, so don't even worry about it. Whatever they
There you
want.
go. But yeah, I mean, I think the point that I'm trying to make is they're just so much more ingrained with this as natural language, and
Yeah.
so I think there's a real gap that's going to continue to evolve between, if you don't use AI on a daily basis, I think you're going to fall behind. I think that's just the reality of how amazing the tech is doing right now. But there's huge gaps in it, especially from making it human. I think we all have a good feel when somebody's getting an AI email or getting AI proposals. So I think the gap is really helping to figure out, hey, how you leverage this, but don't augment it. I think it's getting people to look at workflows with traditional models of how we can move some of those things quicker. For example, ingesting data from an operator into a lender. I mean, that's a real bottleneck point to make sure they get everything they need. How they're talking with customers, how we're using data to give, real time information. I think it's helping investors and operators extract more information. I think it's humanizing the ability of AI. I think that's where the real take is going to go. And I think we're getting to the point now. I've heard, on ChatGPT, not only can it recommend to you the best washer and dryer, but pretty soon you're going to be able to just directly order it. I mean, it's going to get to a point where we just literally talk to AI and it's going to do everything for us. So I think that gap is going to come from, making it human, making it feel good, and not feeling like you're just interacting with AI.
Hey, side note, I'm of the mindset, and I just have come up with this myself. For me personally, and I think worldwide, websites are almost going to be completely obsolete. Think about it. If you need a website, I mean, literally, if you just put the words that ChatGPT can go find for you, I don't go to a website to figure out anything. The other day, I was trying to figure out if my local municipality was gonna pick up trash on Labor Day. I'm not going to go scroll through 18 screens to find that out. I just ask ChatGPT and it goes, boom, yes. The only days they take off is Christmas and New Year's. I'm like, yes. So
Yeah.
it's interesting that but the humanization of it and how it's going to, do the things that we can't stand doing. My belief is that, excuse me, AI can increase the importance of the human interaction by helping us get information that is digestible
Mm-hmm.
and then freeing us up to have better interactions. If it does that, that'll make it a great thing. If we all just become a bunch of robots, that will not be a great thing.
Yeah, and I think to your point, and where I would put my Brussels sprout steak eating MBA grads that are chained to the desks, it's finding those pain points in the process where you can humanize it and really make it smoother. Because it can work so well, but there's some of those break points where you just need that human interaction. I think there's a lot of opportunity there.
All right. So what does success look like for Zeddy in the US market over the next 1, 3, and 5 years? In terms
Yeah.
of fleet adoption, impact, revenue, global scale, partnership ecosystem, like what are you focused on every day of increasing or reducing?
Yeah, I think for us in the U.S., I mean, in the U.K., we've got a very successful established business. We've got over 4,000 vehicles on our platform. We're going well, and they're really scaling east. We're working on setting up an office in the Middle East as we speak. So I think here in the U.S., it's such a unique market versus rest of world. We've always been, open end leases versus closed end leases. inches versus meters. We like to do stuff a little bit different here. So for us, I think really it's getting a deepened presence, really getting some more branding, getting some more scale, and really getting projects done. I've spent 20 years in this space, and delivered hundreds of thousands of internal combustion engine vehicles. The play on words I always do is my goal over the next 20 years is to try to get all those vehicles off the road and replace with more sustainable assets. So I think for me, it's not just about making money for families that own big businesses or for the private equity funds and venture fund capitals of the world. I think for me, it's also making an impact, and something we track is CO2 and NOx. So I think to me, success isn't just about making money and returning money for our shareholders and growing us. For me, success looks like making an impact, helping operators, making a change in how things are done on the financial side. I think that's a 1 to 3 year goal for sure. But long term, I want to build, Zeddy North America to be a place where, talented people want to go and work and be part of a good team that focuses on integrity, adding value, that, want to have balance in their lives. We're very fortunate that, our parent companies out of the UK and the US and Europe have a very different perspective of what work-life balance looks like, or lack of work-life balance looks like. So, I think to me, it's building somewhere where we can get those Brussels sprout eating college grads in that, and I think I see more and more of the younger generation really caring about sustainability, where, in today's market, it's gotten a little political to say, is climate change real or not? So, I think it's really getting out there, getting a brand, building a place where people can come and have fun and have a career and be successful, make an impact. And when it comes to finance, I think scaling's fast. I mean, the goal for me is, you want to be a unicorn. Didn't know what that phrase was before I moved into the startup world, but, we want to get $1 billion deployed on the platform in the US. And I think that's a really achievable goal for us, and then from there, we want to be a place that operators can go and know that they're going to get integrity, that they're going to get full transparency into all their costs, and that we're going to help them, do the best we can to get them funding for their businesses.
Very cool. Awesome. Now, you recognize the prowess of young people, right? These college grads and whatnot. What do you want them to do for you? I mean, you're going in there and like dangling the Brussels sprouts. You're dangling the raw steak. What are they working on? Like, what are they working on to make John's life amazing?
Yeah, I mean, again, I think when you look at things that computers can do well and the things that computers can't do, I don't think they ever take sales roles. I think sales is a human interaction. I think business moves at the speed of trust. And I think we all inherently have some lack of trust when it comes to, all this AI and all the data out there. So to me, again, I love the sales world. I came from a background where I was a regional CFO, a finance guy. I took the leap in my career to move over to the dark side and move fully into commercial.
Welcome.
Yeah, right. But I think that it's that human interaction. I would want to train people to be able to understand listening well, to understand interacting with business owners, to understand hearing their pain points, to helping them add value. Because I think that's really what grows a business, right? It's I think there's a big miss out there in the world today for sales reps that have high integrity, that treat others with respect, that focus on adding value. And I think those are the people that we need in the world that we need in this space. And, I love the profession. I think it's a blast. I think getting to talk to people and work with people every day is more and more valuable. I do miss jumping on the planes, trains, and automobiles and doing a little bit more face-to-face than this world that we live in today. But I think there's still certainly a place in that, of really, as you mature a relationship and you get closer to closing deals together, to sit down. And I think it's even more valuable now that we get to do it less.
Very cool. So this group, they're doing research on potential, partners, potential operators. They're reaching out to them, they're connecting with them, and they're setting up live face-to-face meetings, as virtual most likely, right? Because they can't leave the room. Is that what I'm kind of hearing?
Yeah. I think again,
developing relationships.
It's developing relationships and staying close to pain points, because I think traditional pain points are going to evolve and change as the market evolves and it changes, as AI evolves and changes. we're going to have new problems we don't know about yet. And I think the way you stay ahead of that curve, the way that you stay engaged with it, is by building those relationships, having good conversations, asking good questions, staying close to the industry and staying close to your customers to understand what those things look like so that you can get ahead of them.
What kind of pain points are you typically addressing, that you're seeing today? Obviously they're going to morph over time. What does Zeddy do to relieve the pain of an operator that would make them want to either change what they're doing right now, modify their fleet, upgrade their fleet? What are the pain points, and are there signals?
Yeah, I think one of the biggest pain points is, once you get, let's say you get a line of credit for $10 million to go out there and get a bunch of vehicles, it can be very disconnected once that transaction gets off and going. For example, I met with a private capital fund out in New York. They just deployed 13,000 vehicles in the southern United States. They had a team of people who were sending emails and making phone calls at the end of every month trying to get the mileage on the vehicles so they could understand, how much depreciation was happening. To me, like, huge miss. Like, you can just actually pull that vehicle data directly off an asset. Everything, your toaster talks to you, your microwave talks to you. Every asset out there now is spitting data out there if you have the right, vehicle to ingest that data. So, lenders want transparency into their investments. They want to feel safe, right? Don't we all? We all want to know that our assets are performing. So I think for us, alleviating an operator from having to send monthly reporting on things like utilization and mileage, to be able to have a lender have real-time information around things, hey, are you taking care of these assets? You can pull fault codes off of every vehicle. You can know whether a vehicle was in a crash. You can know if a vehicle has a seatbelt issue. There's so much data that's coming off assets today. By being able to aggregate the data, normalize the data, and visualize the data, I think you save operators just a ton of headache of getting those monthly reports. From a lender's perspective, you can trust the data because, let's be honest, if you're an operator and you've got a couple of things that you want to hide, maybe you delete it off those Excel files, and hopefully that doesn't happen and we're all high integrity individuals. But I think there's so much with just using the same language, seeing the same reporting. And ultimately, again, we have a platform for our lenders and we have a platform for our operators. So they're getting access to the same terms. I think it's just speed of connecting data, which again, on the flip side of the initial intake is the challenge, right? It's doing that. But I think once you get it up and moving and once you have all the data connected, I think you can move a lot faster.
So are you leveraging AI? Because with all that data, right, it can get lost in the weeds. Is Zeddy currently leveraging AI to make that data actionable for the operators so that they don't have to read through all that stuff? It bubbles the important stuff to the top. Is that happening?
Yeah. So we're a unique shop in the sense that we don't outsource any of our IT, any of our tech, any of our production. We're doing all that in London with a team. And I gotta think everyone in that space is leveraging AI. We are. I mean, you can get to a place now where you're able to write a good chunk of the code, but you need humans still to make sure that it's working and make sure it's right to get it across the line. But I think if you're in the tech space and you're not finding ways to leverage that, I think you're just going to get left behind. You're not going to be able to keep up the pace. You're not going to be able to keep your costs under control. But yeah, I mean, we are heavily ingrained and have been for a long time, not only with using that for our tech team, but just making a part of our culture, where it's like, hey, we want everybody to touch AI once a day. Maybe it's just sending an email and hitting that Alt H to polish. Maybe it's using it for a LinkedIn post. Maybe it's using it on a software proposal that you're writing just to give it a once over. But I think we just got to get into the habit of leveraging technology and not being afraid of it.
Very cool. All right. So, if you could wave a magic wand and make just one thing happen over the next, I don't know, 90 days, keeping in mind January's coming up, all that planning and everything for the following year, what would you do?
Oof, magic wand. That's a tough one.
It's the thing.
Can I wave the magic wand for the room of free, no overhead, hardworking MBA grads?
Yeah, there you go.
Yeah, no, I think it's I think it's continuing to push for the energy transition and sustainability in the United States. I think it's gotten very fractured. I think we see certain areas of the country that are really strong pushing into the space.
Sure.
We've got a West Coast block out there that are really driving hard. They're doing a lot of things at the state level to incentivize adoption of clean technology and access and infrastructure. We've got a lot of chunks of the country that are moving hard, and then we got some chunks of the country that aren't. I can remember back when I was sitting on the couch like everyone was in 2020 and seeing those pictures of like LA and China and India where you couldn't see buildings because the smog was so dense. And then within weeks of us not driving vehicles all over the road, how quickly the air cleared up, how you could see mountains, how you could see the sky. I truly am passionate about trying to make an impact there. And I think if we all got on the same page, these aren't problems that we can't fix. We can fix these problems. There's plenty of problems out there I don't know how to solve. But when it comes to transportation and CO2 and NOx emissions, like that's one that really has an answer that we can really drive towards, that we really can make an impact. So if my magic wand's there, it's that we all align on, hey, we care about this, we want to make an impact this, and let's do it.
John Stafford, thank you so much for your time, your candor. Hey, for the listeners who want to follow Zeddy's progress or connect with you directly, how can they do that?
Yeah, I mean, I think to your point, no one's going on websites anymore. LinkedIn's really the way to go, so you can find us on LinkedIn. You can find me on LinkedIn. Be a pleasure to connect with anybody who's passionate about the space or needs support getting funding or, as a lender looking to deploy capital into the space. But Joe, it's always a pleasure to connect with you. It's been fun and hope you have a fantastic Friday.
Hey, thank you so much. Hey, just for clarification, it's my perplexity is all over websites. It's just not me, going and getting that information and just the way it crawls over it. And it blows my mind. I love to give kind of really practical things. I went and I just asked it, what's the price point range for a fairly decent shape 20th anniversary Squire Fender Stratocaster? 10 seconds, man. It just basically said, if it's bad condition, it's $100, medium condition, $125, and, really great condition, $150. And all three of those answers made me really disappointed. So
afterwards, it says, would you like me to price those for you and purchase it, right?
Yeah, that's where it's coming. Just think about watching Amazon TV, right? Oh my gosh, it's brilliant, right? It's like the Truman Show. Think about it. It's going to be like that. They're going to create movies and they're going to go, hey, Brad Pitt, do you want some Cool Whip? And there'll be a little QR code that you can buy Cool Whip right there because Brad Pitt's buying it. So, hey, as we wrap this up at the Anvil and Iron podcast, we believe business leaders are forged through heat and connection, conversations with people pushing boundaries. John Stafford is one of those, and we're excited to see where Zeddy goes from there. Hey, for John.
Have a great day, guys.